Welcome back to another segment of Ask George. This is where I answer questions from the fans, from you guys, in regards to crypto, finances, and anything else out there. So unlike my normal Q&A during my live streams, this is more personal, one-on-one, and I'm going to give you a little bit more of my insights and my thoughts about everything. So if you want to ask your own questions, make sure you head over to my website, CryptosRUs.com, and click on that Ask George button so you can submit as well. All right, today we have five questions that I will be answering. It does seem like a lot of you guys do enjoy this, so I'll continue to do so and post these every Saturday. So let's get started with the very first question.
Hey George, really appreciate this new section where you're taking questions. Really appreciate all the content you put out there. Really understanding what's going on in the market really helps me out. Helps me through those bearish times, understanding, what we need to be holding for and what's to come in the future. My question today is with the recent news with Chainlink. What is backing the stablecoin when everyone realizes that they want to transfer that stablecoin into either an alt or Bitcoin? What exactly happens to that debt that's backing that stablecoin? Would love a breakdown on that. Because I see a lot of people in the future holding stable coins and realizing that Bitcoin is the asset that they should be holding, and see a lot of, that money that's backing those stable coins, billions of dollars. Just curious to know what happens to all that debt. Thanks for answering. Appreciate what you do. Have a great day.
Okay, so this is a two-parter. Number one is, what is Chainlink and what does it have to do with stablecoins? And number two, how does stablecoins work? I think that's also important because it does sound like this person wants to know, what happens when you transfer a stablecoin from one network to another, to another, to another, to another. Chainlink, in case you guys didn't know, is a project that started years ago, and it's the biggest decentralized Oracle network that we have. And what does that mean? What is an Oracle? Basically, it's an off-chain node that fetches data. It doesn't have to be prices, but that's the primary use. Okay. You could also fetch other data. For example, if you wanted to fetch weather, okay, you could do that. You could fetch a whole bunch of stuff, but that's what an Oracle is. It's a data fetcher. And this is very, very important for many projects in this space. For example, DeFi projects. They need to know what the price of something is. And they need to know accurately in real time, because a lot of these DeFi projects, they have liquidity pools, they offer loans, and they need to check the collateral and everything that's going on with the DeFi. Very, very sophisticated. And they need to know the exact price at all times, because if it's wrong, even by a little bit, there are people that can't take advantage of the situation, and we have seen that before. There are other oracles out there where they've been hacked, or they gave slow price feeds or something, one or another, and those DeFi projects actually lose millions or hundreds of millions. So that's exactly what Chainlink is, and is very vital in the space because there are so many projects that rely on Chainlink for accurate prices. Now, Chainlink came out years afterwards, something called CCIP, which is basically a layer 2 that does more. Besides just being a price fetcher, CCIP allows them to actually transfer data between different chains. Because so many chains out there utilize Chainlink already for their decentralized Oracle, they already have a lot of connections in the space. So CCIP basically allows one project to not only fetch data, but also bring data across to different chains. For example, if you wanted to bring some kind of data from Ethereum to Tron, or Ethereum to Solana, or Solana to Avalanche, they're all part of CCIP, and they could all talk to each other. So dApps could talk to each other. So recently, it seems like Chainlink added capability to transfer USDC between many EVM chains, okay, utilizing CCIP, which is great. But I think the second part to this is, what happens to stablecoins? when you transfer from one to another, what happens? Well, stablecoins originate from the providers, right? Like Tether or Circle or Paxos. How they mint a stablecoin is with someone's deposit. So if I wanted $1 billion worth of USDT, I would go to Tether and say, hey, I want $1 billion. Here's $1 billion in cash. And then they mint out $1 billion worth of USDT and they transfer it to my wallet. Okay, so that's how it works. I could also redeem. If I had $1 billion USDT and I wanted cash, I could go back to Tether and get that cash. Obviously, they charge a little fee for the service, but overall, that's how it works. Now, when you transfer, nothing disappears, because from Tether standpoint or Circle standpoint, they still hold the underlying collateral, right? Because every USDT, every USDC is backed by $1. So if I transfer, let's say, that $1 billion that I just bought into Binance, and I used it to buy Bitcoin, Ethereum, Solana, whatever, Binance now holds that $1 billion. Binance can choose to continue to keep it because there may be others that want to convert back, or they could go back to Tether and say, hey, I want to redeem $1 billion worth of cash. They can certainly do that. Most exchanges do not, because the demand keeps going up. But in crypto winter, we have seen, if you go to CMC, we have seen the market cap of Tether go down. So there have been times where there are more changes for cash than vice versa. Okay, so that's how it happened. It's based on if someone wants to cash it out, basically, right? Because Binance, in this example, if they had $1 billion, they could be holding on to it, and then a lot of users convert their crypto into USDT. Now you got 10,000 people or 100,000 people that's holding some sort of the USDT that I originally minted. Those people can convert back. They could go to other exchanges and so forth, right? But the money is still there. And overall, there's more people converting cash for stablecoins than vice versa, which is why the market cap for USDT and USDC keeps on going up. There's less and less people that's converting back to cash at this point because of the demand. So hopefully that makes sense. So you talk about debt and stuff. There's really no debt. It's just the original underlying collateral, the dollars that's backing the USDT or USDC is still there. It's just a matter of people want to convert and redeem it, okay? And most people are not.
What's going on, George? My question for you today is about a topic that seems to be pretty heavily debated amongst the Bitcoin community, as well as something that I've heard you talk about pretty frequently, and that is taking profits. I'm sure every early Bitcoin investor has found themselves falling down the YouTube rabbit hole of videos titled How to Retire Off of 0.1 Bitcoin. Their whole strategy is stack, stack, stack. Eventually the price is going to shoot up. You'll then borrow against it. You'll pass it down to your kids, who will also then borrow against it, and boom, now you have generational wealth. So I guess my question is for a bit of a more in-depth breakdown of why you choose to take profits rather than their strategy of just holding forever. When you take profits, kind of what are the signals that tell you that it's about that time, as well as how much. Something that I've been struggling with understanding is, why would I ever sell a percentage of my Bitcoin when I'm buying at 100K now and all these people are predicting it going into the millions? Especially being a guy who has a relatively good income. I don't really ever have to worry about buying dips. And I have a pretty good savings safety net for just kind of day-to-day things, emergencies and whatnot. So just kind of a general overview as to why you're for or against either one of those kind of mantras would be great and bring a lot of clarity, I think, to people that are new to this. So.
That's a great question. I get asked about taking profits all the time, but I like this question a lot because it goes deeper than that. And it comes from someone, I believe this is Nick. It comes from someone that he seems like he's fairly well off. He doesn't need to take profits. He has good income, source of income. And in that case, he's arguing, why do I need to take profits at all? So this is interesting. I'm going to try to break this down a couple ways. Number one, I'll address the borrowing part, okay? Because we hear about this all the time with the billionaires. Let's say Elon, for example. The billionaires, Bezos, anyone, the billionaires don't really sell their stock. They borrow against their stock, okay? So that's how they do it. And why would you do that? Well, you do that because basically there's no taxes. Because if you borrow against your collateral, your asset, and you don't sell, technically there's no gains. So that's why they do it. They have so much stock, okay? Billions and billions and billions of stock that they rather not pay taxes on. So they could borrow, they could go to a bank and say, I want to borrow $1 billion, and I'm going to put down $2 billion worth of my stock as collateral, right? And the bank will say, okay, and then you're just, we're going to charge you whatever percent. I don't know what that is. Could be 5, 6, 7%. But to the billionaire, that's worth it for them because they rather pay the 7% than pay 25% capital gains tax, right? So it's worth it to them. Now, in those situations, it's a little bit different than most people because they're billionaires, okay? They have so much of their company stock or whatever asset they hold that it makes sense for them to do so. Now, let's come back to reality. Let's talk about Bitcoin and most people, I would say, in this space. There are some well-off people. There are people that have 10, 20, 50, 100 plus Bitcoin out there. Okay? The people that has been in the space for a while or DCAing for a while. And of course, there are billionaires in the Bitcoin land too that came in very, very early. Or like Saylor just decided to go all in with debt. Most people, do not live like a billionaire. They don't have so much collateral that, let's say, a traditional bank would say, okay, I'm going to give you X amount for your Bitcoin. They just don't have enough. And second of all, there is, and even if they do, and there are some crypto projects that still give you loans by if you put down collateral like Bitcoin. So it doesn't have to be a bank. It could be something, a CeFi project. But the thing is, it's not like there's no risk. They ask you to put collateral down, usually double, and it could be sometimes triple what you're borrowing because the underlying asset could be going down. That's where a normal person can get wrecked versus a billionaire. Because when a billionaire like Elon wants to borrow $1 billion, and Tesla stock goes down, let's say 50%, well, the banks go come calling and say, well, Elon, you need to put down more collateral. You need to give us more stock. And he has plenty to give. He could keep on giving, basically. But a normal person, if they're borrowing against their Bitcoin, they may not have more collateral to give. And that's where they can get wrecked and margin called and have their assets sold off by the lending company, by the CeFi company. Okay? And that has happened many, many times. As you know, every cycle so far, the 4 that we had, the 3 previous crypto winters, we went down 80-something%. So people that borrowed near the top or close to the top, they got margin called. And a lot of them got wrecked. They didn't have any more because all their other assets, mostly crypto, all went down too. So they didn't want to sell or they couldn't sell. And even if they did, they couldn't cover. Even Saylor got in trouble for this. Saylor in the last cycle told people to go get a mortgage or go get a home equity loan and go all in on Bitcoin. And a lot of people listened to him. And then Bitcoin topped out and went down 80-something%. People forgot about that. That's why, for me, I don't recommend anyone to ever borrow against their crypto. These days, it seems like it's almost unfathomable to think about Bitcoin going down 50%, okay, or even going down 80%. But we just don't know. Every cycle seems like that, and it happens. This cycle, I think, is a little different because we're backed by institutions, but there's no guarantees. There's no guarantees. Maybe something horrific happens and Bitcoin goes down 50, 60, 70% again in 2026 and 2027. And if you took out a loan, you better make sure you have enough to put in more assets, or you go get a margin called and liquidated. Okay, and that's not what you want. Okay, so hopefully that helps answer that first part, I think. And the second part is, okay, let's say you're not taking a loan against your Bitcoin. If you have enough money and you could always just DCA into your Bitcoin pile, then do you ever need to sell Bitcoin at all? Well, the obvious answer is no. You don't need to sell at all. You could keep DCAing forever, like Sailor. I hate to just use him as the only example, but he's a good example. During crypto, he was able to stand the last bear market. He continued to DCA, and when things came back up, he benefited from that. It's the same thing. I did that all previous cycles too. And people laughed at me. People didn't like it, but I basically held on everything I had. I held on everything I had. I saw things go down 80-something%, and then I continued DCA, and things came back up. And if you're in that situation, you could certainly do that. But there are people out there that argue, well, if you're studying previous cycles and with a somewhat of a certainty that there's going to be a crypto winter and things are coming down, why would you not take advantage of that? And there's an argument to be made. If you know, based on previous history, or you think that the market's going to go down and you're able to buy more at a lower price, then you want to accumulate as much cash as you can ahead of time. That's an argument for why you would want to take some profits as we go up in case that happens, right? So for me, this cycle, that's what I plan on doing. Previous cycles, like what you're thinking, I just held everything, okay? But now I'm in a little better position than I was before. I have, my net worth is higher, and I would like to protect some of that. I don't, just in case, I don't want to see it go down 80-something%, right? Because of my business and my lifestyle and everything, I want to sort of protect it. So that's why for me, I said in my streams before, above 150 for Bitcoin, I'm going to start taking out a little more in case we do get some kind of correction. Now, if we don't, it's okay, because I'm still going to be holding most of my Bitcoin forever, right? But I do think it's smart to have some cash on the side, 20, 25, 30% cash as we go up, because in case we do come down, it's an insurance policy. You're able to buy at a lower price, right? And it benefits you overall. So that's my thinking. You don't have to go with that. You don't have to take profits. If you believe there's no significant dips, or even if you believe there will be, but you don't care, you just want to keep stacking sats and DCAing, even on the way down, there's nothing wrong with that. But there are many that think, well, you're doing it wrong, because if you know that was going to happen, you could prepare better for it, right? So I'm just being cautious. It's really up to you.
Hey, George. Just want to say I'm a George as well. Not really, but the name is Will. I require your expertise to resolve a pressing issue. I purchased Coinbase share at $31 per share. In light of the recent 24-hour all-time high, I am eager to increase my Bitcoin holding. Should I sell my entire Coinbase position to purchase one whole Bitcoin, factoring in the 30% tax liability associated with my tax bracket? Any suggestion or advice would be greatly appreciated. Thank you, and you have a pleasant weekend.
Will, congrats, first of all. Seems like you did really well with Coinbase, which is good. DCAing or buying down low is the right way to do it. I can't give you financial advice. I'm going to start out with that, but I'll share a little bit more about my thoughts about Coinbase and Bitcoin. Coinbase, as you pointed out, broke into all-time high, and partially it's because they have an ownership in Circle, and Circle was so hot. Okay. Also, last month they did get added to S&P 500, which helps them greatly. And overall, there's just a lot of enthusiasm over crypto especially because of what's happening in the U.S., the changes in regulations. So Coinbase is a Wall Street darling now. Okay, so I do think I like Coinbase. I personally hold some stocks and some options of Coinbase. I think they're going to do well. How well, I don't know. I think they're going to do well. As for Bitcoin, obviously, I think there's a lot of room to grow. If you watch me, you know I talk about how we're about to make the next step upwards, and that's not the top. I believe we're going to keep on going. And there's a chance that after this cycle, we just continue forward and there's no crypto winter. So obviously, the potential of Bitcoin is also very high. Long term, who's going to have the greater potential? Bitcoin. Because Bitcoin is scarce, there's no competition, and we'll keep on going. But will there be periods where someone like Coinbase will outperform Bitcoin? Certainly, there will be, right? If you look at the charts, Coinbase within the last month has done very well and has outperformed Bitcoin. So there'll be points short term that Coinbase outperforms. Long term, Bitcoin is going to be big daddy. Okay. So I can't really tell you what to do. I personally like both. Obviously, I hold a ton of Bitcoin and I hold Coinbase stock, right? So I'm kind of hedging. I'm diversifying. I don't have all in on Bitcoin, although I have very little Coinbase compared to Bitcoin. So that kind of tells you my conviction in Bitcoin. But in your case, if you're thinking about making a conversion, you don't have to buy one Bitcoin at a time. You can buy half Bitcoin and still keep some in Coinbase, or buy 0.25 or buy 0.75. So the thing is, I don't think you have to do one or the other. There's a lot of middle ground. So that's what I recommend. I can't really tell you what to do. I think you have to make that determination. But I think short term, Coinbase will continue to do well. And same thing with Bitcoin. So there you go.
Hi, George. So my question is that you are always talking about this company buying $1 billion worth of Bitcoin and this government buying billions of dollars worth of Bitcoin and this person buying billions of dollars worth of Bitcoin. And you're stating, and I watch your videos often, and I remember you saying the reason why it doesn't affect the price is because of the over-the-counter buying. So I'm wondering what your estimate would be based on the current buying that's happening. When is it going to become a point where there's just not going to be any more Bitcoin available for over-the-counter buying, and because there's simply not going to be enough for retail? And so anyway, what is your estimate when you think this over-the-counter buying is going to stop? And then it will just be retail buying. Thank you.
I've been asked this many, many times before. Will OTC ever run out? So the best way to think about over-the-counter is it's just a transaction between two people. That's bottom line. Let me try to make an analogy. Let's say you're a flipper and you like to flip finds at garage sales. I don't know what it could be. I'm just going to make an example like shoes because I like shoes, or sports cards. Okay. And, every summer you go out and you hunt for garage sales and you buy shoes and sports cards that you think you're going to make money at. And if you do it often enough, eventually you'll run out of garage sales to go to, or you've been to all of them and you don't find anything, right? So that could happen, but that doesn't mean that there will never be another garage sale ever again. And it doesn't mean that future garage sales will never have, sports cards or shoes. That's kind of like how the OTC market is, okay? So during intense buying periods, the OTC market will dry up. If it never, dried up, then Bitcoin's price will never go up. The reason why we're at 107,000 and not at, let's say, 50 or 60,000 like last year, we were stuck at 60,000 forever. Why do you think we made that jump, almost 100% jump, from the 50s and 60s to 100. It's because during some point, the OTC market dried up completely. And the price went up, right? But then, the OTC market flooded again. So that's kind of why we're in a situation right now where, we may be having like companies that are buying billions and billions and ETFs buying billions. The price is not really moving. It's because right now there happens to be people that are selling billions on the flip side to these large companies. But at some point, the OTC market will dry up again, and all the buying from the institutions and retail will add up and cause Bitcoin's price to go up again. That's how I see it. It's never going to be like, okay, there's no more OTC sales ever again. It's like my garage sale example. To expect that there will be no more garage sales ever again is unreasonable. There will always be someone that comes out and throws a garage sale. And I'm sure there'll always be someone that wants to sell Bitcoin OTC in the future, right? But it doesn't really matter. What matters is the overall supply running out. So in this example, this garage sale example, you're searching for sports cars and shoes. Let's say that all the used ones that are being sold, there's a limited amount. There's only 21 million shoes, let's say, and there's only 21 million sports cards. You and millions others that are going to the garage sales and accumulating, eventually the chance of finding garage sale with used shoes or sports cars starts diminishing. Okay? And the value starts going up. It doesn't mean that there won't be ever any more in the future. It doesn't mean that, hey, there may not be another garage sale in the future selling these items, but it starts getting rarer and rarer and rarer because there's only a set amount and the people that's been buying them are just hoarding them, right? That's Bitcoin. Even though there may be OTC sales coming out left and right, there may be periods where, there's plenty of Bitcoin being sold in the OTC market. But keep in mind, overall, there will only be 21 million Bitcoin. And the amount of people holding Bitcoin keeps on going up. And the amount they hold is going up too. So it doesn't really matter when or if or how often the OTC market dries up, because in the long run, we know that Bitcoin scarcity is going to overcome everything. Okay. Hopefully that made sense. Hopefully my analogy made sense. I thought it was pretty good. I don't know if you think so, or if you guys watching think so. You leave in the comments whether you like that analogy or not. All right, final question.
Hi, George. This is George. We're all George. George was wondering if it would be unwise to get a HELOC right now, let's say $500,000, and put it into top 10 of crypto. And also, how much could that 500,000 turn into if there's a second leg up at the end of this year?
This is something I would never recommend because I feel like you're just putting too much risk on yourself. And this is part of that quote, never invest more than what you could afford to lose. This plays into it because if you're borrowing, that means you really can't afford it. Okay. I think a lot of people are looking at Saylor and looking at what he's doing. He's raising an enormous amount of debt to buy Bitcoin. He's in a different scenario. First of all, he's a billionaire. Second of all the things that he's doing, he has some very smart people educating him on how to do it and how to avoid risk. Okay? And even if in his scenario Bitcoin goes down, he has formulated some kind of structure where he can't get liquidated and he doesn't have to worry about a lot of things. The only thing he has to worry about is paying back dividends, okay? Basically interest. In your case, it's different because obviously a HELOC is just a home equity line, right? And you're paying a high interest on that. If I'm guessing, it's probably 9%, 10%, because a normal mortgage is like 7%. So I'm assuming it's probably 9 or 10. And you're putting a lot of pressure on yourself. And if something happens to Bitcoin, let's say I'm wrong and we do have a crypto winter in 2026 and we go down 80-something%, you're going to feel awful, because not only did your portfolio go down, but you're paying this 10% interest on this 500,000, right? So it's not something that I would do. It's the same thing as like buying Bitcoin on credit card. Credit card is much worse because you're paying 28% per month. A HELOC, you're paying 10% APY. So it's going to be a little bit different. But still, you're putting so much pressure on yourself to make up that 10%. Okay? And if you don't, let's say you buy $500,000 Bitcoin and we don't move for 6 months, well, then you're paying 5% interest on that 500,000 that you just lost. What, $25,000? Okay, so for me, I would not recommend it. I wouldn't do it. So I'm gonna start out with that. As for how much 500,000 can make with Bitcoin, you just look at the top, right? Where is the top going to be at? A lot of people are predicting 200, 250,000. Some are predicting higher, some are predicting lower. But for me, I personally think it's going to be anywhere between 200 and 500,000, 200 and 250,000. So if you look at where we are, 107,000 right now, right? So that's a little bit more than double. So that's the potential, but it doesn't mean that it's guaranteed. Doesn't mean that it has to go that way. And if you're wrong and you borrowed money, then you're going to be digging a deeper hole. Right, so I just don't recommend it. All right, guys, that's it for today's Ask George. We had 5 really good questions, and hopefully my answers were good. So leave your comments below. Let me know your thoughts, and make sure you submit your questions for next week. All right, have a good one. Take care. Bye-bye.